Hey traders, how you doing? So in this video guys, I just want to talk about self-sabotage and why traders actually fail in these markets due to self-sabotage. I want to give you an example. Basically, if I gave you as a trader a strategy that guaranteed you 20 pips a day, okay, and I said to you, you can use any lot size you want. But if you just follow the strategy, it'll generate you every day. If you follow the setup, it'll get you 20 pips a day, guaranteed, right? So you say now you had an account of $100,000 and you could trade at $500 a point. You know, every day that would be 20 times. Okay, so basically every day that would be 10k. That you'd make, right? Because you're trading at $500 a point and $500 a pip. So what I'm saying here is, by the end of the week you would have 50k. Now, because most traders self-sabotage, even though I gave you a strategy that guaranteed you 20 pips, what would actually happen is I could guarantee you that even if you had that strategy, you would still blow your account. Because you don't understand yourself yet as a trader. Okay, because you don't understand the self-sabotaging habits that you have ingrained within yourself, and you haven't learned to actually control those, and you haven't actually worked on yourself, your own trading psychology, to actually know how to deal with yourself when things go wrong. So basically, that trader, you might say to yourself, if it's a 100% system, how could that guy have blown his account? So he might hit his target, he might hit his 20 pips 5 days in a row for a full trading week. Okay, on the Monday he might do the same thing and hit those 20 pips. But then on the Tuesday, he might say to himself, well, hang on, I'm going to go for 40 pips today. Okay, so he's broken the rules. The rules of the strategy are take your 20 pips and cut the trade. So this guy basically on the Tuesday goes for 40 pips. So it goes up to 20 pips, he holds onto the trade. It goes up to 30 pips, then it goes up to 35 pips, and then it reverses. It rejects a level. So then what he does is he holds onto the trade. It goes all the way back to his entry. He cancels his stop loss. Part of the rules were to have a stop loss in place. He cancels the stop loss. Okay, he would have already made his target for the day. So it goes all the way back to his entry. It goes even lower. It drops 20 pips, 10 pips, 20 pips below his entry. There's a sudden market change in sentiment or news, fundamental news, or some kind of drastic market change, or the market may be in a downtrend actually, and basically it goes 100 pips against him, 200 pips against him, and he holds on, and he basically blows his account. So can you see that with this example, even if you have a 100% strategy, you'll find a way to actually self-sabotage. You'll do silly things because you don't understand yourself. You have to have an exit plan, when things go wrong. That's why you have risk management calculators, you have stop losses in place. That's why you work on percentage risk. That's why you have strict rules when trades go wrong. You have levels where you're going to cut the trade. You have strict risk management, so it doesn't affect your emotions. That's why you trade with low risk. That's why you trade the same pattern over and over again. You need consistency in your trading in your trade setups, in your trade management, in your trading, in your trade risk management, and in your trading psychology. So you need to become not a genius. You need to become not a genius at your strategy. You don't need to be a genius in these markets in terms of technical indicators or structure So you don't need to be a genius at your strategy. What you need to become a genius at is your own psychology and understanding yourself when things go wrong. You need to become a genius at basically what to do when things go wrong, and to have a longer term mindset. I'm not saying have a super long term mindset. If that trader that I'd given you that example of, if he had carried on trading like that and scaled up his lot size over a year, he could have been at a 6-figure account, but he broke his rules. So that's just this is just a bit of a mindset video, just to help you guys out and understand that you have to have an exit plan, and you have to become a genius at understanding yourself, so that the next trade is a winner, or the one after that is a winner, and you can keep going in these markets, because losses are part of the game. They are inevitable. So you've got to have an exit plan, and then you've got to maximize on when things are going right. But at the end of the day, you'll be profitable. Thanks, guys. Hope you enjoyed that one. Take care. Chat soon.